Okay, well, let's get started then. So I'm Chris Hollifield. I'm head of business development at Luxembourg for finance, and I'm delighted to have two really excellent friends from Standard Chartered join me today. So I have John Ho, who heads legal and financial markets at Standard Chartered, and then Laurent, who is CEO of Standard Chartered Luxembourg, in fact. And we're going to talk about the kind of the role of banks in Web3. So maybe just to kick off with, you can talk us a little bit through your history and in this space and your hypothesis around what this technology, how it impacts banks like yours. I mean, you've obviously done lots of investments, but also lots of direct work also in the field. So how do you see this technology actually affecting kind of like the bank stack? What are these investments for? Is it cost? Is it efficiency? Please.
Yeah, thanks, Chris. First of all, I wanted to thank the Lux government and officials for even establishing this panel. In response to your question, the why are banks involved in this area, it's largely in response to one, client demand, because client is looking for a way where products could be fractionalized to tokenization. And also looking at, in terms of the payment space, how payment can be moved 24/7. And we're talking about large value payment cross-border. If you look at the RTGS system, currently it doesn't work 24/7. So it's along about how do we overcome the legacy infrastructure where the world is moving at speed. Clients wants to deal with tokenized securities on a 24/7 basis. If you look at the trends, in the US, the SEC and the CFTC have established a working group looking at the ability to look at what does the world of 24/7 trading means, and also looking at what does the world of tokenized collateral means, because at this point in time where we look at where a lot of the collaterals are handled, it's very much idle money. If I can move collateral at speed, if I can move that reduces what we call your credit counterparty risk, because there's always a risk if there's a gap, a lag in settlement. The other thing is also about reduction in settlement time. That frees up capital lines and also efficiency. So it's all about meeting client demand, reduction in costs, capital, and also allowing clients to sort of trade on a real-time basis.
Do you have something to add there, Laurent? Perhaps maybe you could also talk about how clients have kind of like, what journey clients have been on in terms of coming to grips with this technology, and how you've seen more clients kind of come into this space and be interested.
Yes, it's definitely a very interesting topic. So when you are speaking about blockchain technology and Bitcoin as a whole, you need to remember the first block. It was in February 29, so now it was 16 years ago. So in terms of adoptions, what we need to know is Roma has not been built in one day. It takes time, and it takes time to adopt the technology, and it takes time to adopt the technology from a client perspective. But we see more and more demand, because when you were speaking, for example, of crypto to the different industry between 2010 and 2020, I have to say it was a nightmare. And in my previous job, for example, in 2017, I was supposed to make a presentation to my executive committee in 2017. And one day before my business plan meeting, somebody in US said, Bitcoin is a fraud. So I think that definitely in terms of mindset, it has changed a lot since 2-3 years' time. We see a lot of adoption. We see a lot of good signal. Whatever you are speaking about, crypto as a whole or tokenization of assets. So definitely, it's now or never in terms of adoption.
Yeah, I think that's absolutely right, and definitely you're seeing an uptake in just the commonality of discussion around particularly topics around cross-border payments, reuse of assets and so forth. And I think at least one of the elements that's potentially driving that is developments also on the regulatory side around this space. And so I know obviously Standard Chartered is a very major participant in some of these regulatory discussions out east. In particular, I know you've been in. I think if I remember correctly, you were in Embridge, you were in Ensemble. How do you see also what are your learnings from this, and how do you also see the kind of like the government or the regulatory environment kind of like adapting to allow your kind of business to develop in that way?
Yeah, I think one of the key pillars of removing frictions and allowing this area to grow is having clarity around regulations. And the fact that this, when we look at digital assets, when we look at tokenization, more often than not, there's a cross-border element in it. So it is important to have alignment and harmonization in cross-border regulations. Not necessarily every regulation is similar, but the regulatory outcome of an activity is treated on similar footing. So using the mantra, if you're undertaking the same activity, you have the same risk. The regulators are now looking at, can we be subject to the same regulatory outcome, and that's important. I think yesterday as well, IOSCO published a very thoughtful paper on tokenization in financial markets. It covers where developments are. With respect to Europe, you have MiCA, that provides clear regulations in terms of the e-money token and asset reference token. And then on the 18th of July this year, we have the Genius Act being passed that provide a regulatory framework, at least in the US, on a fiat payment stablecoin that needs to happen. And in Asia this year, you have Hong Kong on the 1st of August, passing its major legislation on Hong Kong stablecoin ordinance that paved the way for a regulatory framework for stablecoins. And I think you could see now the space is happening. And I think why is it happening is, for the longest time when we make payments through the blockchain, you don't have legal clarity like settlement finality that we're familiar with in Europe. We have a settlement finality directive. You're not clear about the guardrails in terms of what's permitted, what's not. And having that clarity does give confidence and trust that this ecosystem can succeed.
Yeah, no, I think that's a very strong message. And obviously, you touched briefly on MiCA. Maybe to come to somebody who's been through or is going through that kind of process now on the ground. Maybe you could talk a bit also about how you see that European framework, developing your operations in this field in the context of the EU.
So definitely in Europe, what is important, and I think it's important for the countries, because when you are speaking about crypto and this kind of technology, what I was speaking just before is a question of trust. And trust is a key element in the financial industry. So in terms of regulation, to have MiCA in place since a year now, let's say, a year now, no, more than a year for stablecoin, and a year, and 11 months for the crypto asset service provider. It's really a key element. Today in Europe, you have more than 60, I believe, crypto asset service provider, more than 60 licenses that has been provided, and I think it's a key element for Europe to have MiCA, to allow distribution in the different countries, but especially to enable what we can call the institutionalization of the industry when it comes to crypto. So definitely more than ever a key element, and yes, we are in the process to get MiCA.
And maybe just for a slight amount of self-plugging for Luxembourg, but you're in Luxembourg. You established an entity, I think end of last year, if I remember correctly, in Luxembourg. Why did you do it in Luxembourg?
I would love to tell you why, but I joined the company when we received the virtual asset service provider. And the guy next to me in Singapore, he has done a fantastic job during 6 months to get the VASP registration. So he can tell you why Luxembourg, and I can add you after. So he will tell you why.
Yeah, apart from us, we also have a good lawyer sitting next to us, close to us, who's helping us as well. And on a serious note, why Luxembourg is Luxembourg has a very clear regulatory framework in terms of dealing with digital assets. In terms of looking at its legal framework, if is one of the earliest sort of country in Europe that actually provide clarity on what digital bond looks like and the way how that is done in a legally permissible manner. So second point is that we do have a very proactive and progressive regulator that engages with us early on, providing us guidance on what can or cannot be done. And we felt a lot of comfort that, you know, in addition to legal clarity, proactiveness, and also the legal system itself, it's clear. And in addition to that, a staff force, right? You know, just to hire people that are in digital assets is no small feat. Just to get them across to join us is also another challenge. So we felt that there's enough talent, people wanting to work in Luxembourg to provide that ecosystem. And more importantly too, if you look at our clients who actually are looking around for a domicile in Europe for digital assets, increasingly, a lot of them are looking at Luxembourg in particular for the reasons I've mentioned, you know, legal system, proactiveness and progressive regulations, regulatory outreach, ease of doing business, and more importantly as well, clients are converging into Europe, but one of the key jurisdictions they're looking at is Luxembourg in particular. Thank you.
Maybe to add, Luxembourg a AAA country, and we know the clients we are working on are looking for a stable country, and Luxembourg can offer the stability, which is a key element for our client. And we should not forget the dynamism of the ecosystem in Luxembourg. So we are a small country, but in terms of talent ecosystem, we are quite big. Let's say we are the first fund center in Europe. So when you are speaking about a potential topic in a 4 or 5 years fund, we know that we cannot have, for example, UCITS fund exposition in crypto and UCITS funds. But if it happens one day in Luxembourg, buying a crypto asset service provider in Luxembourg will be definitely a key asset. And when you are speaking about tokenization of assets, a lot of things has been done. And Luxembourg also is seen as a great actor in terms of innovation. And definitely we have a strong track record in terms of innovation. And that's why we decided to join Luxembourg. It was in December of last year, but we are not alone because Coinbase has done the same. And I know that more actors are going to come in Luxembourg.
Thank you very much. Maybe one final sort of future-oriented question. You know, you're a very major bank with lots of existing, you know, trad-free business, Web2 business, but you're quite right that, you know, the technology stack that we're seeing develop for both for securities, for payments and so on is fundamentally changing as a result of DLT. So how do you see, and it also creates, you know, a wider spectrum of potential, potential ways in which cash can be structured, and ways in which securities can be structured. So how do you see that interplay happening between your traditional business and your Web3 business in the future time frame? Are you expecting a complete transfer over to Web3 rails? Are you going to expect your traditional business to continue for many years to come? How do you see the kind of industry moving with this technology in the kind of medium term?
So the way to look at it is there are two tracks, right? The traditional way of doing things, like people using banknotes, cash, notwithstanding that data have shown in Europe that the number of cash usage post-COVID is coming down. But nonetheless, from a regulatory perspective and also from a monetary sovereignty perspective, it's very clear that the central banks, the ECB, are very clear that we need to have cash or banknotes to complement the new ways of payments, whether in the form of digital payments, whether in the form of tokenized or digital money, like stable coins and the like. So we do see that coexist side by side. And I think the important thing is not so much about the technology, it's about giving the customer choices and allowing for fair competition to prevail. Because with competition, that includes us and our competitors, it allows us clients to choose based on the best possible price, best possible service, And I think that breeds healthy competition in the sense that it actually creates a level playing field where, clients have choices to make. And to the point about the new world where we see increasingly there's obviously tokenized securities or tokenized assets, we are seeing what we call on-chain activity increasing in that sense. So with the on-chain activity on the asset side, you need the cash settlement leg side, which comes into play your tokenized deposits, your stable coins, and also central bank digital currency, which obviously in Europe, they are in looking at an experiment, and perhaps in 2027 to make a final decision whether to issue a sort of CBDC. So I do see this as coexisting, and the choices ultimately depend on clients whether to do via the traditional method or the new market infrastructure way.
And I will just conclude with the quote of our CEO last week in the FinTech week in Hong Kong. He said that in the coming years, most of the transaction will settle on blockchain. So I'm very proud to be part of the group, and especially with the vision of our CEO. And to be honest with you, we are a bank of 170 years old, so we can be considered as a traditional bank. Indeed, we made the bet for the Web3. We have the conviction that Web3 is here to stay, but we have a lot of traditional clients that are moving to the Web3, but buying very Web3 oriented now. We are able to have clients that are in the Web3 that wants to go to the Web2. So definitely, we are in the middle of all type of clients, and we believe definitely that we are here to stay. Web3 is here to stay. Web3 is here to stay. We will still continue to all work together, but we need to make the transition.
Thank you both very much for joining us today. I think that's been really interesting in terms of just understanding. You can see banks with long-standing tradition, still extremely forward-looking, clear conviction and delivery. And I think that's really playing out in the market as well. So thank you, John and Laurent, for joining me today.
Thank you.